All right, you're looking at a daily chart of the Nasdaq, and the Nasdaq says Happy New Year to you with two consecutive down sessions with above average daily volume. Today it was 6% above average daily volume, down 173 points or 1.18%, closed at 14,592. More importantly, it sliced its 21 today with decent volume, and it's still 3-something% above its 50. Always got to keep our eye on the 50. It's 3.5% above the 50. So it's not stretched like it was up here when it was 8.5% above the 50. Now it's only 3.5. So we've made some progress in that vein, but it's not been a pleasant two sessions here in 2024. You can see the Nasdaq rallied from that 12,543 up to 15,150 and is now given 700 points back here. It's at 14,592. So yeah, it's 600 points or whatever. That's not fun. It's down, like I said, 2.79% in the first two sessions, 419 points. So this is not unexpected. I will say it is expected after a 42% gain, from 10,002 up to 15,000. So that it had a heck of a year in 2023. So this is not unexpected, but it's tough to stomach. If you're fully invested in the market, if you're out of the market looking to get in, you're thinking this is great, but that's all about perspective. I did want to take a look at the QQQs, something that I don't really, pay much attention to because basically the 7 stocks dominate this thing, but it's been selling off with good volume too. And today's slice is 21 and cracked the 400 level. That is not looking great, down 4 sessions in a row. Yeah, you just, if you're outside the market looking to get in, you just wait till the selling abates and it stabilizes and starts bouncing higher, but you got to wait for the bounce. And right now we don't see any signs of any bounces, not after 9 weeks of going straight up. This is the S&P 500. This one's down 3 days in a row, but this is below average daily volume. It's a little higher volume today, and this is above the 21, 4.1% above the 50. So S&P is doing a little better than the Nasdaq. Anyway, let's get to some of these stocks here. The leading stocks are looking worse than the index, actually. This is Apple, and it sliced its 50 with volume on Tuesday. Today followed up with more losses. So yeah, this cup with handle pattern, this is, if they deliver good earnings and it rips up to 200, you're going to say this is a nice handle and a nice shakeout. If they deliver, disappointing earnings and it goes back to 160 or 170, you're going to say this is a failed cup with handle. So that would be hindsight. Go to the weekly chart. The chart pattern looks good. It's got this cup shape, 3 weeks tight, but then these last 3 weeks, I know, it's on lighter volume, but this is, it doesn't look great for Apple. Anyway, let's move on. At Microsoft, now this has been going sideways for a long time. It ran up to that 384, but it really did not participate when the Nasdaq had that big run and that 9-week run. This thing was going sideways. So, and once again, if they deliver strong earnings here at the end of the month and it rips up to 400, you're going to say this is a great cup with handle pattern. If they bomb earnings and it goes back to 350, it's going to be a failed chart pattern. So that's kind of the way it goes. Google, this is a nice cup with handle pattern. Once again, this one traded down to the 21 and found support here and bounced a little bit today. So this is the best looking of all the Mag 7 as it's above all of its moving averages. That's a Google. Meta, I had a couple of rough sessions here, pull back to the 21 inside day today. Yeah. Amazon, I believe it's pretty similar action. Yeah, just an inside day. This one's below its 21. Just a tick below the 21 here. Yeah, nearly 1%. Still hanging in there, hanging on to the 21. Tesla, this one doesn't look as good. This one's sliced. It's 21, 3.4% below the 21, still above the 50, but Not looking too good here for Tesla. It needs to reverse this mojo action up to the downside and start heading the other way. Anyway, NVIDIA. By the way, I don't own any of these stocks. I just cover them every day because they're so massive. And I think that they just had a big move in 2023, and they're going to spend most of the year digesting these gains. They might go up 10, 15%. But even for NVIDIA, if it went, to 550 this year, that's a 10% gain. That would be a fantastic year after, a 250% move. Anyway, this one pulled back like everything else and is just 1.4% above the 50, 1.6 below the 21. So it's like in no man's land. So what we're looking for is to see the selling dry up and have this stock stop going down and just kind of stabilize. It doesn't have to reverse and fly higher, just to see the relentless selling abate a little bit. And we've seen 4 consecutive days here, so maybe tomorrow or Friday I think 3 days. The first 3 days of the year, we're going to see some selling. Then maybe Friday it'll chill out. This is Adobe, another big important stock, and this thing sliced its 50 with some decent volume, and followed up today with another 1.43% loss. So Adobe looks bad. It's in the Apple territory. Anyway, I'm going to move on to the drug stocks because that was a little pillar of strength today. The drugs and the utilities and the oil and gas stocks, which we're not really interested in, but we have to observe the market and see what it's giving us. This is Novo Nordisk. I talk about this one a lot. It's just been in a trade range for a long, long time. I would say ever since it cracked the 100 barrier. Now this did have a 2-for-1 stock split, so it was really like 200. And it was back in September, and it's just been kind of going sideways in this little choppy trade range. But it's above the 10, and it's showing strength. I could see this thing poking above 104 and making a move higher, maybe up to 115, 120. A 10% move, is not from like 105 to, I don't know, 115 would be kind of a typical move. These guys have they have the sales and the earnings growth. They're building manufacturing plants. They bought a manufacturing plant. Their problem is supply. There's plenty of demand. That's a good problem to have. Eli Lilly was on a heater today. We mentioned yesterday that it had broken through the 50, and today followed through. Bank of America named it as their stock for 2024. Now, oftentimes that doesn't mean anything. Today, there were some definite buyers in here. That's some strong volume with a 4.3% move there. So it's still in a trade range, though. I wouldn't say that is broken out or anything like that. To me, that's still, you can see this is a nice base, and it runs up, forms a flat base, runs up, another flat base, and that's just kind of the way it trades. Ken Langone said it's going to be the first $1 trillion drug company. I don't know if it will or not, but he cites their pipeline. He is the founder of Home Depot, co-founder of Home Depot. So he knows his business, and I'm not going to argue with him. DYN, they had an approval today for a muscle disease, and who we saw that was the LBPH yesterday just ramped higher. This was a nice 13% move for DYN on their approval, and this one gave back 10% after being up 316% yesterday. So I think most longs will take that. AMGN was another one of these large mega cap. This is the mega cap, 160 billion. I don't know. It's a large cap drug stock, and you can see I should have had this one on my ready list. I blew this one. AMGN looks really good. Broke out yesterday, followed through today with a nice gain. But if you look at the weekly chart, this big cup with a handle, and then this week is the breakout. So might not be too late for AMGN. That looks really good. REGN, Regeneron. These guys have a nice pipeline as well. And you just got to pay attention to earnings now. We're getting into earnings season. We can see it broke out of this flat base last week and has followed up this week. So nice move, 4% this week after a 3.7% move last week. So Regeneron looks good. A couple others that I blew. This is a cup with a hand. This is why you look at the weekly charts here, the cup, and then it kind of pull back here in the last 4 or 5 weeks has just been ramping higher, up 10% this week. This is Collegium Pharmaceutical, medical generic drug stock. And can't argue with that. That's a beautiful symmetrical cup and a breakout. And the other one is IMCR. I'm not sure why I put this one down. I'm not really familiar with this one. Immunocore. And there you go. That's why I did it. Nice cup and breakout here. This week is up 3%. Last week was up 4%. So that's a nice move. You look at the daily, pull back today a little bit, but yeah, oh, made a new high, then pulled back. So that looks good and actionable still. What's the last one that I want to show? No, I'm going to move on to the cybersecurity stocks because Sentinel-1, now this is one that I wanted to buy and I was waiting for it to pull back, and now they purchased PingSafe today and was down like 8%. So this is where it's like if you're in the stock, you're going, oh, this stinks. Slice is 21. I'm probably gonna, for me, I would get rid of this. But if you're outside looking in and trying to get in, you're just licking your chops saying, when's it going to stop going down? When's it going to reverse and start going higher? And that's when I want to get in. So you can see the relative strength line crossing below and the industry line crossing below the 50 there. But, you know, they made a purchase, an acquisition. I don't know the details of the acquisition, but you can see it's sold off the last couple of days with strong volume, and it's down 13% this week. So that's a nice pullback. And getting back to where I am interested, I'm getting really interested in that one. Anyway, CrowdStrike, you know, this one I talked about when the you know stocks go up, you got to take some profits. You know, it went up from like 160 to 260, and I took some off because it was getting too big for my portfolio. And also, as we're getting towards the end of the year, I didn't want to carry as much into 2024. And you know, it's hanging around as 21. It's not doing anything wrong. You got to expect profit taking after a big move like that. But CrowdStrike, hang on to the 21, buddy. Hang on to the 21, please. Zscaler, another one just hanging on to the 21, another one with a real big move and just pull back to the 21. So that one looks, you know, fine as well. CYBR is actually the stronger one of these. It pulled back to the 21 yesterday and bounced a little bit, and it got a little resistance at the 10, then broke above today, then pulled back and closed lower. Yeah, 214.38. So CyberArk, you know, the very funny today because this one was doing well, yeah, and then it pulled back. This is a 5-minute chart. The Fed minutes came out today, and the market accelerated the selling after the Fed minutes. And you know, the market's supposed to look 6 to 9 months forward, except for on Fed minutes days where it looks back 3 weeks. So that's kind of a stinker. I wanted to point out something with ELF here because ELF is selling off, and people are, you know, ragging me about ELF, but you know, this is a nice pattern here. I just want to point out it made this base, ran higher, and now it's made this other base. You can see that 14-week base. But if we go back to 2023, ELF did this last year. I remember people were saying, sell this thing, it's just diving. So it dove 3 days in a row, right? This is January of 2023. Like I say, the first couple weeks of January is just really tricky. And so this is probably some profit taking because ELF was a big winner in 2022, which was rare because most, you know, it was a big bear market. So once 2023 hit, it got a bunch of selling, sliced to 50. You got to cut it loose. I didn't. I broke my rule because I had conviction in the stock. And then what happened is I fast forward the days a little bit. It had earnings and gapped higher on earnings. So it went from 48 to, I don't know, like 70 in a couple of weeks span. So this is, yeah, 73 or so. This is why, you know, this is a tricky deal. But now Alpha's selling off here in 2024, and people are, you know, having a conniption fit. But this is kind of what it does, you know. And you got to wait till the earnings on February 1st because you could see it just gaps on earnings, gaps in May, gaps in August. You know, a nice move in November, and now you got to wait till February, and we'll see what happens, right? But I like the chances with ELF because that's the pattern. I have conviction with this company. Anyway, until they prove me wrong, and then I get blasted for a 20% loss one morning. But anyway, that's the way it goes. I just wanted to show you that. Also, Deckers, trying to hang on to the 21 like CrowdStrike and Zscaler, and it was actually up the last couple of sessions after a sharp pullback below the 21. So that's a good sign for those who are holding. Celsius is another one of these retailers that I'm interested in. Now it's had a whale in here selling and selling and selling for months, and this guy could be done selling. This is broken above its downtrend line on Tuesday, had a nice sharp move, and then pulled back today, which I like. It made a little higher move higher and then pulled back. But yeah, yesterday was up more than 8%. Pull back here, and I think as it gets closer to these moving averages, I think there's an opportunity here for Celsius. They have the growth profile that I'm looking for in growth stocks. I wanted to show, oh yeah, I've got to go to the semiconductor stocks because these things are bugging me too. AMD. Now this is one that really chaps investors here. It's breaking below it's a downtrend line here, and that's not the point I'm trying to make. I'm going to go back here because AMD. I'll go back a couple of sessions here. So AMD was ramping, right? And this is just 3 sessions here. And it was up 150, I believe. And then the next day, the last day of the year, it went traded up to 151 something, 150, 150. But it took from December 11th to December 29th, 18 days for it to go from 135 on December 11th to 150, 151. That's 16 points, right? Well, now in January of 2024, it's made up, it's down to 135 in 2 sessions. So that's what frustrates people. These are the stairs up and the elevator down, and it's kind of frustrating, but it's just trying to hang on to its 21. The company didn't do anything different. It's just, people taking profits, and it's frustrating though if you're holding that stock on the long side. ASML is part of the problem because the Netherlands has told ASML that they're restricting their chips to China, and this one's been selling off. It's been the leader of the down slide here. The last 4 sessions, you can see big volume on this semiconductor equipment stock. Sliced to 21, followed up today with nearly a 2% loss. That looks bad. Broadcom, and this is kind of why you take profits on these spikes. This thing was up to what 1,150. And then, the last couple of sessions is down 100 points, sliced to 21. So, like I say, if you want to get in this stock, you're cheering on this downturn. But if you're in it, you're going, this thing stinks. I'm losing money. So it's all about perspective. Couple of software names. Snowflake sliced to 21. If you look at the weekly chart, this to me, it still looks pretty good. This cup, this is I would consider it a shakeout, nice 7% shakeout, but you got to give it time. If you're not in it, that's definitely one to watch. Same with Datadog, same principle there. Nice little shakeout there after this big cup with handle pull back to its. That's the 10-week line, which is not exactly the same as the 50-day. You'd think it would be, but it's not. And ESTC is another one that I am stalking, would like to, but I'm on the outside looking in here now. Did own it, but I got rid of it, and now I'm looking to buy back in, and there's a big gap here. So, if you just look at the weekly chart, it broke out with this big cup with a handle, had this 3 weeks tight area, and now it's failing. So maybe it'll pull back to its 10-week. Which is, just a tick below 100. So I'm definitely just stalking these. I'm watching these. GitLab, Sentinel-1. There's a few of them here. Datadog, Snowflake. This is GitLab, which sliced its 21 as well. So like I say, if you're on the outside trying to get in, this is great. If you own this, it's boo-hoo. This kind of it's hard cheese. What can you say? That's the market. I wanted to point out one thing before I go, and that's this shipping trade with the pirates. and causing a lot of problems. And oil is going up, and so are the shipping stocks. I mean, this thing was up 10% today. It's all based on news, and you can see the volume coming back in, and just a couple of other stocks in this this transportation shipping group. This thing is making new highs. This is MATX Matson. So these are big, strong moves for these shipper stocks. I'm not interested in buying them, but I'm just observing the market, just pointing it out. And anyway, that's it for me, except for I lied. I have one more thing, and that is the energy complex. Beaten up. It was the big leader in 2022, beaten up in 2023, and now it's the only game in town the first 2 days of 2024, and it's up what, 2.7%, while the Nasdaq is down 2.79%. But you can see it's been beaten up. The big stocks in the XLE are ExxonMobil, which is up for the couple of days, but this is just a rotation out of tech profit taking into some beaten down names that, these are decent stocks, but oil's down a lot. So, I mean, they're great companies. They're producing earnings, $14 in earnings and sales. It's just, oil's been down. It went from what, 90 to 70. So these stocks took a hit while the tech stocks went higher. This is Kodiak Gas Services. This is one that is on our ready list. It's had a nice little move here, a breakout. And this is a nice IPO base, and it's moving higher, up 2.4% this week. So you like that kind of move, especially in this type of market. Weatherford is on our list. It's just kind of stalling here. It pulled back. It closed at its 21 today. So just kind of shaking out. Maybe an opportunity there. PR, Permian Resources. This one's had a good week. I mean, this is 1.76%, while the Nasdaq is floundering, and also Matador. So I'm just pointing this out. I'm not interested in buying these, but this is a nice little consolidation pattern. It's up nearly 2% this week. So we're just going to keep our eyes on them. Keep an open mind, remain flexible. The best ability is flexibility. And at mcstockcharts.com, we never give up. Thank you for watching.